So let's take a closer look at what those figures can mean for the US economy with the help of Sarah Hewin, senior economist at Standard Chartered Bank. Thank you so much for speaking to us. So what are we looking at? A third quarter that's actually stronger than the second, but the actual growth rate still very meagre.
Yes, I think the overall picture of the US economy is one which is struggling to reach trend growth following on from quite a severe recession. Our own view, the view that our New York economists have, is that the third quarter growth numbers out later on today will in fact be weaker than we saw in the second quarter for a number of reasons. The government side, state and local government spending is very subdued. Net exports are likely to be a negative factor, and there's a lot of uncertainty about the inventory level of inventory support this time round.
And Sarah, the initial jobless claims just yesterday were a little bit better, but essentially the unemployment rate still hovering around 10%. I mean, a key concern right now is that the labour market is showing little evidence of actual improvement.
Yes, I think that is very significant. If you look at the speeches that Ben Bernanke has made and other Fed members, then they've certainly pointed to the real problems in the labour market as one of the reasons why they feel that more easing is needed from the Fed. So we are expecting that there will be further quantitative easing announced next Wednesday.
I mean, that's almost a certainty now, but it has been largely priced in. So with that in mind, could the initial announcement be met with some disappointment in the markets?
Well, there's still uncertainty about what the programme will look like. I think we're getting the sense that it will be a programme of perhaps $80 to $100 billion by month. The question is, how long will the Fed continue with it, and will they actually tie the programme to developments in the economy? We think that they could well announce that they'll continue with quantitative easing until growth reaches sustainably above trend.
Sarah, how much stimulus can we expect?
In our view, we think we'll see these $80 to $100 billion purchases continuing for at least a year, because we think that that's how long it's going to take for the economy to pick up to a trend rate on a sustainable basis.
So you do think that'll be enough to get job growth going, to get money flowing through the economy?
Well, I think that there is some evidence that quantitative easing has worked, and you could make the argument that the reason why the economy is still struggling is that perhaps not enough has been done so far. So, yes, there should be some impact.
Sarah Hewin, senior economist at Standard Chartered Bank, thank you very much indeed.